Hi, my name is Cedric Le Rouge. I'm the CEO of Adexma. I put together an Excel file to help you set up your goals for the coming years. It's been very challenging. A lot of changes happened, and you want to try to project and understand what you're going to do for the next couple of years. So I pulled some data together. Hopefully you can benchmark that information and set your business to keep on growing for the coming years. I'm going to share with you that Excel. Here you go. Okay, so a quick user guide. You can go back there and see what you're going to need to play with that Excel. You need to know what was your sales in 2019, your gross margin percentage, your EBITDA. If you have your net percentage, why not? Or you can plug it in as well. But what's going to be critical, and now that we are at the end of 2020, you probably know if you've done anything on your price during the year of 2020, were you able to increase or decrease your pricing? Same thing with cost, your COGS. Were you able to negotiate with your suppliers and get a better cost or not? And volume is a big one, right? That pandemic really hit many businesses, so your volume most likely is going to be shifting around. And the last one is expensive. Administration expensive, mostly fixed cost. Have you done anything during 2020? I put a few percentage to give you kind of a range about what I've seen in my professional experience, that yes, price change can vary between 2 to 7%, and that's still reasonable. To negotiate costs, you probably can find a 1 to 5% with your supplier. The volume is really dictated by the market, and I think that's where most of you again have been hit. So last one is, expenses. You control that. That's your structure between 1 and 10%. Making it as efficient as possible. If you go beyond 10%, most likely it's a significant restructuration. But again, just to give you a little bit of a guideline as you plug some numbers. So we have two set of tabs in that Excel file. We have profit margin by region that you see here in greens. They're set up the same. What is different, as you see, is the region. Is your business practicing in the United States, in Western Europe, or both and globally? So pick the tab that suits you. I'm just going to pick, for example, the profit margin for the United States. And then the last one is we're going to take lessons from the profit margin tab and see what does it look like in a couple of years, and play with percentage and make us think about what type of action we're going to need to do and implement during the next 2-3 years to recoup from this crisis. So now that I set it up, I'm going to show you the profit margin tab. So as I said, I find great resources online, and I thought I needed to share that information. It's awesome work. I put the source in the bottom. Beautiful work done by that gentleman to pull all that data together. So here in gray, I just put an example. I'm going to keep it blank for you, and you're going to be able to access that Excel and put your number. I just imagine a contractor in the service industry making about $3 million a year, small business, 30% gross margin, 12% roughly EBITDA, and aiming for 4% net at the end of the year. So this is how it it look like, right? It's all zero here. There was no change per se. Nothing was done during the years, as if we had a 2020 like 2019. So because we have that great data that we can benchmark, you can filter here, you can scroll and find your industry. And so for that example of a contractor, it's going to be in the service industry. And yeah, I think that one is most likely to be the case, right? A business service example. There's those ratios actually benched against 165 firm. So it's a pretty solid sample size for you to look into it. And yeah, a bit shy on gross margin, therefore a little bit shy on EBITDA, but doing pretty much the same thing on net. So it really depends on businesses. It will get very tricky on the net aspect of things, especially with taxes and all that. So let's keep that business, get a bit more specific. Here you go. That benchmark over here, about 3.5. So again, taking that example, you would put your own number, and that small business took a dip like many, and then now is averaging about a 15% reduction of its volume. So you see how it's calculated for you. Here you see exactly the dollar amount that in comparison with 2019 is impacting the business. So the business is now negative on net. Gross margin didn't change, EBITDA got hit, and the business is not gonna be profitable this year if nothing gets done. So something you can do obviously is looking at making your expenses tight, reviewing maybe your personnel, anything in your structure that can be adjusted. Take a good look at it. What I put over there was a 10%, not exactly the same percentage of a volume, and it give you a cut here. You were able to do a cut about 10% of your expenses. So that's a great lift of 15% compare on your expenses. Here you took a greater hit, and you're still short. You're not going to be in the red as a business overall, but you're still short of basically $80,000. So there's two leverage here that you could think about. Is maybe you negotiated with your supplier. Maybe if you have if you had some cash flow, which it can be tough to keep with that type of situation. Let's say you were able to negotiate or at least pay on time, which was very on demand during the pandemic. You were able to negotiate to have a 2% reduction on your cost. So I need to put it in the gray there. So you see here, it gives you a lift again, but not quite enough. I give you a $42,000 lift. It's not quite enough, and you're still short $39,000. Now I want to make you think about what if, and it's been so volatile in the marketplace that I can imagine easily that as a small business, especially, everything is tight. You can't do it all, and it's one of those areas, at least one of them, if not more, you are not able to intervene at this point. So here, the calculation is pre-made for you as a suggestion to arrive at a zero impact. So if you were able to do a 1% increase during the entire year, you're still a little short. Let's do a 2%. You actually would be in the green. Let's do a 1.5. Not discounting some typical discounting maybe you were doing, and maybe you were able to renegotiate based on the pandemic. Now you're breaking even. Now you neutralized that dip that many businesses took. All right, so let's take a little pause here just to assess what we just done. We basically pushed our business to think that with a 15% decrease in volume, we were able to balance it out by reviewing our expenses and cutting off 10%, negotiating with our supplier 2%, and adjusting, stopping discounting some of the things we're doing to customers with negotiation, obviously, and we were able to balance things out. Very rough analysis, but this triggered, I believe, to a business owner, some thinking here. Okay. So you take that approach here, and now you can jump into your incremental changes. $3 million business, you put your number 30%. That's what you used to have as gross profit margin. 12% EBITDA. That was life as we knew it. And here you can put back the scenario we're talking about, loss of 15%, cut back 10%. So just before I do that, I'm just going to pause. You lost 15% of volume. This year you took it hard. This is a loss for you of $135,000. If volume doesn't change next year and the following year, this will accumulate. This is a loss in your business that you used to have that keep on accumulating. It's gone another year. It's gone a third year. So this is again for you to think about not just 2020, but how do we get out of it, and how do we put that EBITDA, incremental EBITDA, back at zero, if not in a positive number. So what we say we have done in that example is we cut expenses. And that cut allowed us to regain $54,000. And again. So it's like saving that you're doing, but that's going to accumulate over time. It does not, didn't work the first year. It would not work the second year, and it will accumulate again the third year. This is still lost a value of $250,000, $243,000 to be precise here. This is incremental loss for your business, again, that you're not recouping. So negotiation on cost, you may be able to do it once. I imagine a 2%. And these 2% help you out to balance things out a little bit, but did not quite do it. And again, something that you can keep. This is wonderful. This is great. But I want to show you here the price, how quickly I put 1% and accumulate, and if I put 2%, it quickly gonna put you in the green and accumulate nicely. Okay. Now, are you going to do price increase every year? Maybe, maybe not. You can optimize to a certain degree your pricing. You gotta obviously looking at your price structure. It's a whole different conversation. Cost, are you able to negotiate? Similarly, your vendor is going to want to increase their prices. So I'm going to keep those kind of even. Is the volume going to come back? Not entirely. Are you going to get a bump of 5% next year? I hope so. In terms of expensive, are you going to rehire and after all the transformation you've done, are you going to put everything back the way it was? Probably not. I would expect just a half. Okay. Now, is the volumes going to keep on growing? I don't think it's going to be as a rocket, but it will grow at 5%. Are you going to increase your expenses another 5% as well? Not sure. I'm really not sure if you guys going to maybe not leave it that way. So you see, if you look incrementally, that you're not pulling back your loss of volume. It's the other things that you've done that help your business stay in the green, okay? Now, if I haven't done my pricing increase, which it's been so crazy, it could very well be, you will not balance back in the black. You still be negative here all the time. You're recouping a little bit, but not quite. So if you haven't done it this year, and I fully understand, I will strongly recommend at least to look into bumping your pricing, not just a blanket pricing, but adjusting according to your customer and what value you give to your customer. That should balance things out pretty closely for this sample business. Maybe optimization is possible to be done at 3%, and that will do it. Something, again, totally at reach based on my experience. And then are you going to continue to do price increase in the future? Probably, if you do so, probably not at the same speed. So I'm just going to leave it at that for the example. So I hope you enjoy that short video. And if you have, again, I'm going to share that Excel file. You see it in the description, be able to download it from my Google Drive. If you have any issue, you give me an email. And we can actually do that exercise together and walk through a different scenario. I'd be happy just to exchange with you and review that Excel together. The last things I didn't talk about here was another sample that I did myself by accumulating the financial data from Finance Yahoo on French company doing business in the US. So they're a global company, they're publicly traded. And something to keep in mind here, if you have a great gross margin for a software company like Dassault, your second bet is going to be volume. Your first bet on all type of businesses is pricing. See how much leverage, how much control do you have with your pricing. As you go down in gross margin, you realize that cost is starting coming to play as a second lever in your business, and even more as you get linear in terms of gross margin over here for automobile part, machinery, and that type of industry. So that gives you a sample size much smaller, but you're going to find the exact same, I'm going to put it here, exact same situation here. If I was putting 1% of price, negotiated 1% of cost, adding 1% of volume, or reducing my expenses by 1%. You see how if I sort it by gross margin, except for banks because they print money, so it's a bit of a different way to look at EBITDA and so forth. So I just blank those calculation out. But you see how the price lever is really the number one. But volume is, again, the second lever that you can play with your business as high margin, and you quickly shift to, as you get to the 40%, to cost, reviewing your COGS and make sure you have the best buy for what you supply to your customer. So a lot of data, but you can personalize it for your own company, tweak it, just focus, zero in on 2020, focus what happened, what you wish you have done, and spread it out. Put it on the next 2 years, 2021, 2022, and I really encourage you to look into getting in a positive number here as incremental impact. This is your business. This is for you to recoup that extraordinary year of that touch everyone. So again, thank you for following me. Thank you for looking at the video. If you have any question, please make sure to reach out. Thank you very much.